State of the markets is next, and my guest is our, Mamkuyo. He's a fixed income dealer with Vetiva Capital Management. Good morning to you, Awa. Thank you so much for joining me on the program.
Good morning. How to you?
So it's it's the last trading day of the week, and it's been a quite very harrowing, nail-biting, edge-sitting week for Nigerians and, of course, for investors as well. Taking a look at Wednesday's data that was released by the National Bureau of Statistics, GDP contraction of 2.06%, and we've seen the debt markets reacting accordingly. Just give us your thoughts on it.
Thank you very much. We expected these results to come out in this quarter. So I think the market has already priced in yields at these current levels, expecting inflation to come out at 17.1 and GDP results to come out at minus 2.06. The market will continue reacting to persistent mop-ups by the CBN, and also the market should keep reacting to the CBN trying to, maintain their tight monetary policy stance. I don't think the market will do anything really drastic at this point. The market will just keep playing in the T-bill space, most importantly, and the bond space will remain quiet over the period.
But then you see, this is a very trying time for portfolio managers, wouldn't you say? So how do you think portfolio management can actually work in a recession?
For portfolio managers in a recession, I think the portfolio manager should shift from more risky corporate papers because in a recession it's very difficult for companies to make revenues and earnings, and therefore default risk is a bit higher and treasuries. So I expect to see a shift from corporate names to federal government-backed instruments, and which will most likely be treasury bills because of the attractive yields we are currently seeing on that space. I expect to see more demand in that space as CBN continues to give us yields above 22% for the 364-day paper. So I expect that portfolio managers will shift. This shift will be seen on the FGN-backed instruments, mostly treasury bills. The bond space, we expect that portfolio managers remain cautious on that space because we've not seen the full adjustment of yields in that space yet. We expect that adjustment to occur, but at this time, due to supply constraints, we are not seeing those adjustments currently. But barring any change in CBN policies, we expect that this change will occur in the next quarter. So we expect to see yields inch up slightly and persistently in the bond space, given the fact that CBN is maintaining their tight monetary policy stance at this point. But should they change it to focusing on growth rates, then we might see a little bit of a demand pressure in that space.
So for the month of September, what would you say, or how would you expect investor sentiments to be? Bullish, British, or bearish?
I expect investors to remain bearish for the month of September. I expect the market to keep reacting, like I said earlier, to the mop-ups done by the CBN, and I expect yields to remain at the current levels that they are at the moment. But going towards the end of September, we have the monetary policy meeting, and the market will read the body language of members of the meeting, and if the market senses that CBN is about to change the policy direction to growth rate as opposed to price stability, then we expect to see a bit of bull run in the market. But if that body language is not seen, then we expect the market to remain bearish as it currently is at this time.
Thank you so much for your thoughts this morning, Awa. Thank you so much for coming through for us. Have a great day.
Thank you very much.
Well, that's it on Business Morning for today. Many thanks for staying with us. And of course, it is the weekend. Let's try to make the most of it. I'm Harriet Agbini. Have a profitable day and a great weekend.